Well, the market definitely closed weak on this Friday, and that's kind of an understatement here. We were down 2.5% on the NASDAQ composite. And in this video, as we'll get into, we'll talk about the market indexes, leading stocks, a few different sources of sentiment, the IBD big picture article, and finally the wishing wealth GMAS signal. And at the end of the video, I'll give you guys my overall take on the overall health of the market. So hopefully you enjoy. And if you do find this video helpful at any time, please go ahead and leave a like down below. It really helps me out and my channel. And of course, subscribe if you want to see more videos just like this one every single week. With that said, let's dive right in and talk more about the NASDAQ. Obviously, super strong negative action to the downside on this Thursday and Friday, finishing the week right at the lows below the 13,000 level. And the big question now is, are we going to undercut and retest these lows? And where do we go from that point if we do get there? Now, I don't have a crystal ball. Nobody does. Nobody knows exactly what's going to happen. But what you can say right now is that the trend is down. We are below declining 21 EMA and the 50 SMA. We're also below a declining 200-day moving average. We are in a stage 4 downtrend as of this moment. And let's actually go over to the weekly chart and take a look at that as well. Once again, very negative action really starting from this week here, where we had kind of stalling action on higher volume, then basically a 2-2 reversal undercutting that low on that week, and then basically 3 straight weeks now of finishing right at the low. So definitely some distribution piling up here. We saw an increase in volume on this negative week, and overall we are in a stage 4 downtrend because we are below a declining 40-week moving average, also below the declining 30-week as well. So definitely not a great view here. And looking back in history, you can see that at many points we look like we're maybe going to turn things around on the weekly, and then we just have one more leg down. So we'll have to see whether we get something where we undercut this level, maybe find support right at this area, 12,000 level, which is a prior area of support and resistance. Once again, nobody knows exactly what's going to happen. All we can do is manage risk in real time and play the probabilities and trade with the trend. So once again, be careful out there, manage risk. If you're a short-term trader, this isn't the optimal environment unless you're operating to the short side here. And if you're a longer term position trader investor, most likely you want to be pretty light and increasing your cash positions. And really should have been starting this from the start of this year. So with that said, let's move on over to the S&P 500 and take a look at that chart as well. Let's go ahead and close this here. This looks very similar, very negative action, undercutting these lows, failure at that 200-day moving average, and a big downside reversal on this day. And is also reflected in the leading growth stocks as we'll go through Tesla, Google, all the FANG names. We'll walk through those charts as well as some leaders that have been holding up well, but now are showing some signs of distribution. So looking further at this chart, we're below a declining 21 and 50 SMA. Once again, finishing the week right at the lows, and we're kind of in no man's land here, and maybe a little bit short-term extended to the downside. But if we get an inside day here, I definitely want to be careful we don't get another kind of reconfirmation here. And once again, these lows are definitely an area of interest to watch. And if we do break that, we've got that similar level bet way back here as we were watching on the NASDAQ. The 4,000 level lines up pretty closely to that. But once again, these are just levels of interest that I'm watching. Nobody knows exactly what's going to happen. All we can do is look at the market indexes, the leading stocks in real time, and look for signs and clues of institutional distribution or accumulation. So with that said, let's move on over to the next index. Let's take a look at the IWM, the Russell 2000. And this looks definitely weaker than the other two. We're really in a stage 4 downtrend here. We couldn't break back above this 209 pivot, and we saw that wedge drop right in this area, EMA cross back here, and now reconfirmation, basin break here to the downside. Once again, in no man's land back near these lows areas, definitely an area of interest to watch for a potential reversal. But if this continues to fall apart and the overall mega caps also continue to sell off, we could see another leg down. Let's go ahead over to that weekly chart. Once again, looks pretty vulnerable down here, and this is the biggest area of interest right down here around that 180 level if we do significantly undercut these levels. And we'll just have to kind of wait and see what happens. And stocks in a downtrend can continue down in a downtrend a lot longer than anybody thinks. You just have to look at a lot of the 2020, 2021 leaders to kind of confirm that fact. UPST, SQ, PayPal, Shopify. Nobody thought those stocks would be down 70%. And yet that's what the market decided to do. So once again, no one knows what's going to happen. I've said that a few times here. So we just kind of have to wait and see, and we don't have to predict. All we have to do is analyze what's currently going on and the current trend in the market and individual stocks. So that is the IWM, the Russell 2000. in general. Let's take a look at the Russell 2000 growth here, the IWO. Once again, we're getting close-ish if we break those lows to this significant level. And it looks very weak on the weekly, finishing the week right at the lows. And going back over to a daily chart, once again, we're basically right at these lows right now. RS trading 32, very poor, and we're stuck below all this overhead supply. So we're really going to need a significant change in character where we start to build out a stage 1 basing pattern, get back above that 200-day moving average, and then kind of break out from there. And that would start another potential stage 2 uptrend. So that is IWO. Also worth taking a look at the FFTY, the Innovator IBD50 ETF. This similarly looks very weak. It looks like it actually made a new low here, finishing the week at basically 52-week lows, undercutting this significant level. And we're just in a downtrend below, declining 21 and 50 SMA, 200 SMA as well in a stage 4 downtrend. That's really all you need to say here. And it all kind of started from this failed breakout here. And I'm sure nobody trading it back in this area thought it could go from 52 to 35, or the stocks within this index could decline so much. But once again, the market has the ultimate say, and ultimately that's all that matters. Only price pays. So with that, let's move on over to a few of the big growth stock leaders and take a look at how they're performing. So starting, of course, with Tesla, we've got a failed move from this kind of tight area on earnings. We had a gap up, push upwards, and then basically a fade into the end of the day. This day was actually respectable considering the overall action of the market, but overall still looks pretty vulnerable here right near that 1,000 level, and I'll be watching this level pretty closely. And I'm sure a lot of people are looking to short through this low. And overall, this is holding up a lot better than most stocks out there, but that's really the best thing you can say about it. Negative action so far, big downside reversal, negative reaction to earnings, never a good sign. And we'll just have to see what happens from this point, whether it can stay above that 50 SMA and that 200 SMA as well, and form out this basing pattern. Moving on to the rest of the FANG names, let's start with Facebook. Overall, this is just in a downtrend, very negative action, undercutting these lows, very high volume these past 3 days. And it's very interesting to see how it failed right at that HVC, which is that close on that gap down, rallied right into that and the declining 50 SMA. And that confluence was basically too much for the stock. And we responded downward from that point. And now we're below that 200 level after being at a high pretty much at 384 way back in this area in basically late August. So that is Facebook, definitely in a downtrend as of this moment. And it is in a stage 4 downtrend as well. Taking a look at that weekly chart very quickly, you can see we're below that declining 40-week moving average. A lot of damage has already been done, and we'll just have to see what happens for the stock. Right now, it's in a distribution phase, and you can see all the huge down volume weeks here, really suggesting that institutions are selling the stock and actually going over to that fund ownership. You can see a dip over the past few quarters in that overall fund ownership summary. So we'll just have to wait and see what happens. Not really a focus of mine here. It's a pretty mature company and also just very weak in general. Moving on to the next stock, let's take a look at Apple, pretty much the strongest of the bunch here. But once again, big downside reversal here, negative action undercutting these lows, and looks like it's got a date with that 200 SMA. And like Tesla, we'll just have to see whether it can hold that 200 SMA, stay in that longer term uptrend and above that 160 level. And if it doesn't, well, then it looks like we're in for a longer correction here. And right now we're just in a short-term downtrend below declining 21 and 50 SMA. And we'll just have to see whether it can stay above that 200 SMA. Moving on to Amazon, let's take a look at this chart here. Once again, very weak the past few days, breaking this flag to the downside. And we're below declining 21, 50 SMA, 200 SMA. Might sound like a broken record here, but we are in a downtrend. And this could be the start of potential stage 4 downtrend as well. Moving on to Netflix. This has been really obliterated. We had another earnings gap down on huge volume, and we're just in a downtrend here below declining 21, 50 SMA, 200 SMA here, and going over to a weekly, we're once again in a stage 4 downtrend. And going over to a monthly, you can see we've got almost a repeat of these significant declines in the past. And at these points, basically Netflix was able to reinvent itself and kind of improve its fundamentals. And we'll just have to wait and see what happens with this stock, if it can do that once again. And basically recover from this point. But right now it's in a downtrend, short-term downtrend, long-term downtrend, and it's no touch for me and not something I'm looking to really trade or invest in as of this moment. And I'm moving on to NVIDIA, which in my opinion should kind of replace Netflix in that FANG acronym. Once again, we're at a downtrend, undercutting these lows below a declining 21, 50, and 200 SMA. So not a great look. This is once again showing a lot of distribution here. We've got these unfilled gaps to the upside, which show weakness. And we'll just have to see whether this can find some support accumulation And a significant level to watch is the underside of these bases right here, as well as the top of this kind of 1 year long base, which is set. And that is at around 147.27. So this isn't quite a straight line here. We do have a slight increase here. So it's just below that 150 level is a top of these prior bases. And you can see a lot of areas of potential support and resistance. But once again, nothing is support until it's proven to be so. So we have to wait for, that oscillation, the kind of dampening in volatility, volume as well, and just the restart of a potential uptrend and move up the right-hand side of a base. So that is NVIDIA. Moving on to AMD, it's always good to look at kind of the sister stock. This once again is very weak, and we're below a declining 50 SMA, 21 EMA. The 200 SMA is still increasing, but we're well below it at this point, and this should start to kind of tail down here, and just definitely a significant downtrend over the past few months, going from 164 and now undercutting 100. And I'm sure back in this area when it was breaking through, bouncing off 100 here, everybody thought they missed it, that AMD would never return to 100, but it just goes to show you that anything can happen. And now we'll just have to wait for another resumption of the uptrend. And that's pretty much it when it comes to kind of the bigger cap names within the semi space. And let's also take a look at GFS, AOSL, and also RMBS, also just in downtrends here. And we'll just have to kind of wait and see what happens and where they can firm up here and start new uptrends. So with that, let's move on to a few other names. And just in general, when the semi names aren't doing too hot, tech in general usually is underperforming here. And that's pretty much what we're seeing right now in the market, as well as kind of former leaders like Shopify, UPST, those type of names, PayPal even, SQ. These are just in downtrends, stage 4 downtrends, and a lot of damage has already been done to these names. And right now it just looks like they're chopping around and just in longer term downtrends, just kind of in no man's land, not showing any accumulation just yet. So we'll just kind of have to wait and see on those. And let's take a look now at the names that have been holding up well. Oxy, the oil and gas names, these also got hit on Thursday and Friday, which is definitely negative in terms of the overall market. This was the leading group, and if these can't firm up, tighten, and kind of restart their uptrends, that is pretty negative in general for stocks. And also taking a look at MTDR, let's just kind of go through XLE just in general, and you can see downside reversal and undercutting that 21 EMA, which had been support during all these times right here. So definitely a little bit of a changing character, and we're undercutting this as well. Let's also bring up ExxonMobil and also CVX, and you can see the kind of same type of action, downside reversal or failed breakout, and now pulling back within their base. So these can firm up for sure, and we'll just have to watch that 50 SMA and see if we can find support there, restart an uptrend, and try a new breakout. But definitely signs of distribution coming into this name. You can see the big pickup in volume on these 2 negative days. Another group that was holding up pretty well, especially late last week, was the shippers. And these just kind of stalled right near all-time highs and showed distribution late last week. We also had Grin, which I highlighted last week, showing similar action. Google as well. These just kind of didn't fall through on their breakouts. This is holding up a lot better. But just in general, this isn't enough to hold up the entire market. And right now, even the names that have been outperforming, the fertilizers, MOS, CF, these are starting to get hit now. So it's kind of the last leaders getting hit now. And seeing these names that were in the leading groups, the oil and gas names, the shippers, the fertilizers, finally getting hit and showing signs of institutional distribution isn't a great look for the overall market as a whole. And we'll just have to see what happens, whether this is the start of a even deeper correction or it's the last leg down. No one knows for sure. We don't have to predict. All we have to do is analyze and just keep an eye out for leadership groups that are starting to show relative strength, starting to kind of outperform the market even to the downside. And yeah, just stay optimistic because the next uptrend will come. We just have to be ready and also preserve both our mental and financial capital so we're able to capitalize on the next batch of opportunities. So with that said, stay ready and let's move on over now to sentiment. All right, so moving on to my Twitter surveys, we saw a slight drop in bullishness from 32.5% to 27.5%. Honestly, this is still relatively high considering where we're at in the marketplace and also how things ended last week. So we'll just have to see what happens with this number next week if we do see further continuation to the downside. And I'd love to see this drop into the teens. That would really reconfirm that there's a lot of bearishness here. And we haven't seen that really since the March 2020 correction. And I do want to kind of emphasize that this is very secondary for me to my analysis of the market, the leading sectors, leading stocks, how many setups there are in the marketplace. Sentiment to me is just kind of the cherry on top And I don't really use this to make my determination on the health of the market. And I often get messages like these, and I 100% agree. Look at the charts. This should not really determine how you trade or invest. With that said, let's move on to the name exposure index. And we saw a slight increase actually to 74, which is actually surprising to me. I'd love to see this number drop significantly next week. And I think that probably will happen considering the Thursday and Friday we saw. And I'd love to see this number get back in the 30s, the 20s. That would be awesome. That would really reconfirm that there's a lot of bearishness here in the marketplace. Moving on to the bulls versus bears poll, is just kind of oscillating, and looks like the bulls are back under the bears, which is a good sign. And lastly, we've got the put call ratio, which is slowly inching up, but I'd love to see a spike to that 1.15 level. So that's pretty much it for sentiment. Let's move on now to the IBD big picture article. And the headline is stock market falls hard again. Hospital, coal, steel, mining stocks thrashed. Kimberly-Clark surges. So overall, I discuss how the kind of former leading sectors right now, which is those coal stocks, steel, oil and gas, those finally got hit. And overall, they discuss how materials lag, and overall a few stocks down here to watch, and ones that showed a little bit of relative strength on this day. And overall, their view is now a market correction. In my opinion, it's kind of been that for the majority of this year, and even last week, I think we are already in a market correction, and we've got a bunch of leaders down in volume. So lastly, we've got the wishing well GMI signal, which is currently green since April 12th. And on Thursday, the GMI score was a 2 out of 6, and things only got worse today. So I'm sure this either stayed at 2 out of 6 or is now a 1 out of 6 or 0 out of 6. So overall, my current view is a market in correction. Right now, the last leading groups got hit, those coal names, those oil and gas names, and there isn't really anything to trade to the long side. And we're just in a choppy corrective phase, distribution phase, and we just kind of have to wait and see for new groups to emerge and start to see that relative strength and those groups bucking the overall trend and starting those moves up the right-hand sides of bases. Until we see that, be very patient, stay optimistic, keep doing that homework, because that's really going to pay off once we finally do get that new uptrend. And with that, I hope you guys enjoyed this video. If you did, please go ahead and leave a like down below and subscribe if you're new to the channel, and I'll see you guys in future videos. Thanks.